Listen, last time I checked, I wasn't interested in investing in Kodak, so if it's a camera company, I'd be a little bit concerned. But look, Neil, when the market's had the kind of run like we've seen, adding $3+ trillion of market cap, it's to be expected. Optimism is off the charts, and the skeptics come out of the woodwork on a deal like this. And what's interesting is everyone wants to equate this with a sign of a top of the market, right? One of those bellwether moments. And it's a really expensive company. It's 20+ times sales, twice the valuation of Facebook. It's got $30 billion market cap. It's crazy from that perspective, but I think it's not a sign of any indication of fraud in the Trump trade. If anything, this has nothing to do with the Trump trade. The Trump trade's about the old economy. It's about industrials. It's about financials. It's about real economy.
Larry, to that point, and you mentioned the sort of the Trump trade effect that's going on and the enormous run-ups we've seen and the quick sprint over 21,000 yesterday, and the markets are surprisingly holding their own, that in such an environment, and froth is always, I understand, in the eye of the beholder, but things like this are part of the environment that you get in a market run-up. I'm not saying that means that the market run-up isn't justified or that it can still go further, but you see a lot of hysteria around a single issue or much attention to a single theme that reverses itself. What do you think?
It does speak to the fact that there's so much money tied up in these pre-IPO consumer technology names that are just struggling to go public, and they don't make money, so investors aren't that excited about buying them. And a lot of that money went into these companies because interest rates were so low. So you could argue the reason that money's there is because of Fed policy. If we had a more normalized economy, maybe like we're seeing today, where confidence, people are investing in business, plants and equipment, that type of economy would have prevented those excess dollars going into private deals in companies that will never make money. So I think the interesting thing is investors should be more concerned about things like the $20 trillion debt that could weigh on the Trump trade, or perhaps European elections, than a one-off mega cap unprofitable company that could be a sign of froth in the consumer technology space, but says nothing about the real economy.